Okay, good morning. It's now 11:30 here in Baku at the COP29. So let's get started with this session talking about the important topics of accessing climate finance and how to localize value chains in emerging markets. My name is Chris Stevens. I'm the director for both Asia and Africa at the Carbon Trust. It's a real privilege to be here in Baku for this important part of the climate negotiations, and a real privilege to be co-hosting this event with our friends at the Nigerian National Council on Climate Change. This event has been planned closely over the last few months, and in particular, I'd like to thank both Dr. Nkruka Madueke, the Director General of the NCCC, and Sadatu Gambo Madaki, who's really driven this event in combination with my colleagues in London. In particular, I'd like to wish Sadatu happy birthday today. So I hope this event is a fitting celebration of today. So as I mentioned, the topic for today is value chain localization and climate finance. Bridging the gap to drive momentum in emerging economies. And we're delighted to have an expert panel gathered here to dive deeper into this topic. This topic is a critical part of the discussions, both around how to transition to a low carbon resilient economy, but also how to achieve the wider goals of sustainable development. Value chain localization is a fundamental part of boosting the local economy, creating new jobs, and strengthening supply chains. Furthermore, by localizing the manufacturing and assembly of key technologies required for the energy transition and the decarbonization of a number of industrial sectors, these efforts are fundamental to decarbonizing by increasing local energy access, improving energy reliability and security, supporting technology transfer, and critically accessing the finance required to invest in plans that change the way things are. Today, I look forward to hearing from the panel about how emerging economies can access climate finance within the context of the discussions here in Baku about the new collective quantified goal, or the NCQG. So for me, the real success criteria of these efforts is the economic benefits to the surrounding businesses and communities, and the enhanced environmental, economic, and social performance. To dive deeper into this topic, let me introduce the panel before we dive into some questions. First of all, we have Dr. Kabir Yusuf, the National Project Coordinator for the Special Agro-Industrial Processing Zones Programme as part of the Federal Ministry of Agriculture and Food Security in Nigeria. Next up, we have Amanda Luna, who is a senior manager from the Carbon Trust team in Mexico. Amanda is an expert in particular in climate finance, and has worked with a number of financial institutions across Latin America to enhance the flow of finance to a number of key sectors, including agriculture in a number of countries in that part of the world. So looking forward to hearing some of her experience that could be relevant for wider emerging economies. Next up, we have Mohammed Shahid Ahmed, the Chief of Staff to the Chief Executive Officer at the Nigerian Financial Intelligence Unit. And last but not least, my colleague Boya Huyad, who is an Associate Director in the Carbon Trust Energy Transition Team. Boya is the Director for a program that we are delivering in Nigeria, exploring the energy transition, in particular, trying to identify how we can transition away from the use of diesel generators across the economy to cleaner energy solutions. So it's a really experienced panel with a varied set of insights that we'll look to dive into now. So to kick us off, I'm going to start with you, Dr. Kabir. How can value chain localization drive both economic growth and climate resilience in emerging economies?
Thank you very much, Chris, for this question. I think first is for us to understand the benefit of value chain localization, especially compared to localization of these value chains in other developed economies. I'd like to give an example of cocoa. That is the main ingredient for chocolate, just one commodity. You can do a lot with cocoa. We all know that the chocolate industry is a $100 billion industry. And currently, 70% of this cocoa is being produced by 4 West African countries, which is Nigeria, Ghana, Cameroon, and Cote d'Ivoire. But the farmers only just get about 2% or a bit less than 2% of that $100 billion industry. Why? Because there is no value chain localization. We don't add value. We just produce and we ship out. And then when there's value addition, they bring it back at a much higher price. So I think that is the first thing for us to understand. What is the value of localizing your commodities in your country with regards to meeting the SDGs? Now, the economic progress. I think it cannot be overemphasized, even from the business side, from the development world. I'll give you an example of what we're doing in Nigeria and how that is supporting economic progress for the country. I'll take cocoa again. Yes. So currently we're producing in one of our states, Cross River, we're producing it up to chocolate dust, right? And from our analysis, we've made about more than 1 million people we've taken them out of poverty. So agriculture or industrializing agriculture supports about 5 to 6 SDGs. SDG 1, 2, 9, 7, and 13. Zero hunger, zero poverty, climate action. So I think it cannot be overemphasized how much economic progress that can deliver. Thank you.
Very good. Thank you very much, Dr. Kabir. Really good to hear some of that. And I think the key role that agriculture plays in the economy and the opportunity to localize the value chain to really capture that value within the local economy for the benefit of the communities there. We're going to come back to that later on, but that's a really good assess the scene. Let me move on to Amanda. Amanda, you've worked with a number of different financial institutions across Latin America whose job is to support that economic development with a focus on the agricultural sector. Can you share any particular success stories from your work? Thank you.
Yes, thank you, Chris, and thanks everyone for joining this side event. So I'll talk about one of our flagship projects in Mexico. We have been working with the French Development Agency, the AFD, for over 6 years now. And what we did is that we implemented a sustainable finance program that was targeting the agriculture and the rural sector in Mexico. And I wanted to touch upon a specific case where we realized that we could make a small adjustment on the program to reach even further indigenous farmers and also small producers. The program basically had a list of eligible technologies that could be provided with an incentive that was a reduction in the interest rate. But we realized that even though the program was, as I mentioned, targeting indigenous and the rural communities, not everyone was accessing these loans. And this was basically because coffee producers, which is similar to the cocoa case, they were not in need for a specific technology. They rather needed investment towards working capital. So what we did is that we had a discussion with the AFD and FIRA, and we were able to adjust the program so that the working capital loans were eligible to receive these decrease in the interest rate. And what we realized that was going on is that organizations of coffee producers that typically join together several indigenous and small coffee producers were able to access this capital and to pay in advance to coffee producers so that they could keep growing shade-grown coffee that would be collected by this organization and then sold to different consumers across the value chain. So in the end, this has benefited over 3,700 farmers in Mexico. And something that I also wanted to highlight is that 30% of these producers have been women, which is something that the program was also seeking to achieve. So not only just providing climate or sustainable finance for agriculture, but also to provide finance for women as a vulnerable group in agriculture. And something that I also wanted to bring about this example is that we we realized that in the end, there are going to be large companies working in the agriculture sector that will also need finance. So a way where the program could provide sustainable finance or climate finance to these large companies and ensure that these benefits would like move across the value chain was that large companies would only be eligible to access this type of loans if they had in their value chain small and medium companies, so that the finance could leverage or could flow down across the value chain. Thank you, Chris.
Great. No, thank you very much, Amanda. And that was a really helpful link from Dr. Kabir's opening thoughts about the role of the agricultural value chain, and then that really critical question about how do you begin to access finance, and what type of finance is needed for different technologies or the working capital requirements, but also how you introduce those requirements to ensure that the value is shared with all the different parts of the value chain, down to the smallholder producers. Very good. Now let's stick on the topic of finance, because next up we've got Mohammed, who's obviously involved with thinking about some of the wider governance around the financial sector in Nigeria. Mohammed, what's your sense around the challenges and the critical barriers hindering emerging economies from accessing the climate finance that's necessary to achieve the goals that are set locally?
Thank you very much, Chris, and thank you very much to the DG of the Climate Change Council for inviting me to this event. I think, as you said, there are some challenges and some barriers to sort of value chain localization, which you need to address in terms of making sure that you have a significant enough and sustainable enough pipeline of projects that can be financed, whether through domestic resource mobilization, through the use of development finance, or even leveraging private finance. There are three that I would like to maybe look at today. The first is, I think we have to recognize that for any effort at value chain localization, the initial cost can be quite substantial. So you have to think about where that initial seed capital is going to come from. The cost of capital can be quite huge. So does that make sense to attract private finance for that? Or do you use seed capital for this? This is the first issue. Connected to that is the issue of competitiveness. So if you are setting up a value chain locally, you're going to be competing against global value chains that probably in the short term have significantly lower costs than you. So again, the question is, how do you incentivize finance into these local chains? The third issue is around the capacity and skills that may not be available within the domestic context, right? So if you're going to build a domestic value chain, whether, as Dr. Kabir has said, for the agricultural industry or for other industries, I know in the implementation framework we have for the National Climate Action Plan, we've identified a number of areas: energy, security, oil and gas industry. So do we have sufficient capacity and skills locally to address some of those gaps in terms of the overall value chain? Now, if you take one of these instances, for instance, project finance, there are a specific set of skills that you need to develop project finance. You need to be able to develop the project finance documents. You need to be able to develop the models. So how do you build that capacity locally? And one of the ways that you could do this is potentially by tapping into global expertise. So whether that's through the International Finance Institutes or through civil society. So this is one way you could do that. And then I think also the other risk that you have to look at is, depending on the level of maturity of the local market, if you are sort of focusing on supply chain localization, you may be introducing what potentially could be a single point of failure. This would be making your supply chain vulnerable to very local disruptions, right? So, for instance, if we are localizing the cocoa value chain, how do we ensure that we build climate change resilience into that value chain? So, for instance, short-term droughts do not impact our ability to produce these products and affect our ability to compete within the global market. And then, of course, we also have to look at issues to do with the restrictive global trade practices. As you move your supply chains domestically, are you able to compete internationally? Are your products able to compete internationally? And I think within the framework of global trade negotiations, we also have to think very carefully about how we build those skills locally in trade negotiations to be able to access the international markets. And then finally, I do think also we have to think very carefully about the transparency and integrity of the local markets, the transparency and integrity of our financial markets. How do you ensure that you have the international community has visibility into how those value chains are operating in Nigeria, how they are being financed in Nigeria, and how they are being governed in Nigeria, right? Because we cannot get away from the fact that there are certain perceptions of Nigeria globally. And by making sure that we're being very, very transparent about these value chains, I think that can only help to attract and crowd in more global finance. And I think ultimately it's about, as Amanda has said, making sure that you have a mix of financing models that you have. So some financing must come from domestic sources, some must come from the private sector, and some must come from development finance. But it's making sure that we're able to target the finance to the right market for that finance. So maybe this would be some of the things that I would suggest. Thank you.
No, thank you, Mohammed. That's really helpful to map it out. And I think at the point you made there, we'll come back to about identifying the role of different types of financial institutions in addressing the different risk profiles across the investments required to decarbonize and develop these sectors further. So we'll certainly come back to that in a moment. So finally, let me hand over to Boya. Boya, as I mentioned, is an energy transition expert at the Carbon Trust and has been supporting a program that we're delivering with funding from the IKEA Foundation, exploring the energy sector and in particular the use of diesel gensets in Nigeria and other emerging markets and how we can begin to replace them with clean solutions. So there's a number of technology challenges there, financing challenges and skills too. So Boya, I'm over to you to touch on some of them, please.
Yeah, thank you, Chris, and thank you for having me on this panel. So I lead the Zero Emissions Generator Program, which is called ZGen for short. The funding for this is on track, but we will have final decisions this month. But we're expecting to go ahead with that, and that will start. Then the program will start next year. And what the program does is a number of things, and it's focused on a theory of change, which means that we're wanting to create tipping points in the market. So we want to make the market self-sustaining, and we're trying to move the needle on a few things. The first one is on volume. So the target is to replace diesel and petrol generators that are being used in Nigeria, particularly with small businesses and domestic to start with. And for this, we want to, our base assumption is that we'll use solar panels and batteries. And this is a more expensive solution up front in terms of high capital cost. And therefore it is normally sold on a pay-as-you-go basis over a couple of years. So what the program does, one of the aspects of it is the Green Genset Facility, which is a grant-funded, so far, facility of starting with around 5 million euros. We're aiming to ramp it up to 100 million euros plus. And that facility is there to bulk buy products from outside of Nigeria to start with, to get the price point down, and then also provide working capital loans, concessional rate working capital loans to solar and distributors. And the idea of that is then to reduce the cost for end consumers in Nigeria so that it reduces the operating cost, it reduces the noise pollution from generators, it reduces PM 2.5 as a particulate matter, so it should improve health as well. And that overall should benefit Nigeria as a whole. We also, other parts of the program are on awareness raising, so making sure that people understand the benefits of the replacement, and that solar and batteries can work very well as replacements for petrol generators, and to target it. I think it's what is really important is to make sure that the products that are sold eventually benefit the people that buy them. And for that matter, to that end, we have installed 500 meters on generators and a number of generators to get a picture of how these generators are used, and then it will be targeted towards those that benefit most from that. And then we also run part of this an accelerator program. And that accelerator program is targeting technologies that are near to market. And that's a range of technologies. That could be just small batteries, so rental battery schemes, management tools of microgrids, things like that. And that is trying to broaden the technology base so that it's not just one solution. We start with solar and batteries, but we're trying to find the best solution for this and then provide finance to the distributors of that so that can be solved profitably. So and finally, we also work with other financing institutions that support Nigerian banks so that you can get local financing so through guarantee funding. So InfraCredit is one of those things that we don't work with them directly, but they are an example of people that do this that reduces the cost of lending to customers. So specifically on localization is not a direct part of CGen as it stands because the timeline of the program is about 3 years to start. We're aiming to extend it, obviously. But I think that CGen can absolutely help towards localization because if you can establish a robust pipeline and large enough orders, that can help scale up the local manufacturing faster. And the biggest challenge actually for distributors of solar panels and generators for this is the high inflation and the depreciation of the currency, and that the money comes in and they have to pay in hard currency for the imports. So it becomes very difficult to actually make the pay-as-you-go model work. And if you localize the production, that would then solve at least part of that. You would import raw materials rather than finished products. So that would reduce the challenge there. So and I'll leave it at that.
Excellent. Thank you very much, Boya. Really good to hear about some of the programs, some areas of focus, and certainly good to flag the opportunity in the future to think about the local the deployment of manufacturing to support wider clean energy deployment in Nigeria in the future. Before this session began, I was speaking further to Dr. Nkruka about some of the real topics we want to dive deeper into. So just for my panel to bear in mind in the next round of answers. Critically, it's about access to climate finance. I think that's something which, when I hear within the wider COP29 at Baku, there's a discussion around the need to scale up finance flowing from multiple different actors globally to support the accelerated decarbonisation of emerging economies like Nigeria. So what can we think about the different types of climate finance that are required to achieve that? But in looking beyond the flow of finance, there's a question around technology and skills. And these are sort of two fundamental parts of any transition. How do you get the right locally appropriate technology to be deployed initially maybe in a high-risk environment? How do you de-risk those projects to begin to get to the scale that's required? And what are the skills across the local value chain that's required to begin to really develop a thriving local sector that's going to create all the multiple benefits we talked about before in terms of both decarbonisation, but wider social benefits too, such as job creation and poverty alleviation. So finance, technology, and skills are three sort of core aspects we really like to dig further into. So let me come back to Dr. Kabir and maybe think about that climate finance question again. And in particular, how do you think climate finance can be strategically deployed to catalyse the localization of value chains in the emerging economies?
Thank you very much again. So I think first is for us to understand the application of climate finance first, right? And what the agricultural sector is. I'd like to focus on that sector. It's one of the NDCs in our country, and as we know, is one of the highest emitting sectors in the economy, right? Ranging from livestock emission to deforestation from land clearing, and also to industrial use when we want to industrialize our agriculture. So in Nigeria, under the SAPZ program, so the country has compartmentalized this kind of funding as regards to its application in the country. So we have a range of loans, grants, and also investments, right? Now, A critical understanding of the value chain from production to aggregation and processing makes you understand that first you have the smallholder farmers that are in the low economic chain that you need to support. So for those smallholder farmers, we usually deploy grants to support them boost their production and yields, right? And of course, in economic quantities for them to get the required amounts so that they can further reinvest into their lives, so that they can be that sustainability of business and investment, continuous investment. Now, as we grow them under a growth scheme to a certain level, we now start deploying commercial loans that they can be able to afford. By then, they must have understand the value of reinvesting into agriculture, and also they're part of the agricultural economic ecosystem for them to be able to bring back. And from then, this is where now we need climate finance. This is to scale up for those kind of investments. So my colleague here was mentioning very interestingly about trade, right? So the Nigerian government sees international trade very, very differently. Instead of a competition, is more like a collaboration. So that is why in the agricultural sector, we put in a lot of tax havens, right? So instead of farmers competing with other international farmers, we're now trying to attract investment into the country. We have one of the cheapest labor cost. We have the arable land, and we're strategically situated in Africa to reach all other African countries. So instead of competing with the Nigerian agriculture, why not come inside the country, invest, right? So still coming back to climate finance. Under our own program, we have a range of grants, as I explained to you earlier, grants and loans, and of course, climate finance from AgriFin. But I think the application or the investment or the flow of climate finance from developed and developing countries is really, really low. I'm not sure, perhaps it's from the understanding of its application or it's from the risky view of agriculture as a risky business. Yeah. Yes, but if we really want to support production, which is sustainable food systems, we really need to increase that flow, specifically for the low-income smallholder farmers to boost their yield, because we now want to industrialize the agriculture. Without a free flow of feedstock in economic quantities, you cannot industrialize. Thank you very much.
Excellent, Dr. Kabir. Now, very, very helpful to you to frame that, the collaborative opportunity around the investment required. There's obviously clearly, a significant opportunity to scale up the agricultural sector in Nigeria, to which would deliver benefits to a wide group of stakeholders, both within the country and outside. So that's something to think about. And Amanda, you've done a lot of work thinking about the different roles that financial institutions can play in scaling climate smart agriculture, and the role that different types of organizations can play. So international financial intermediaries, some of the local banks. So maybe you can talk a bit more about how those two organizations can collaborate to deliver the right impacts on the ground.
Yes, thank you, Chris. So I'll start by mentioning that the way we have been working with international development institution is bringing a combination of finance that would help de-risk investment in agriculture, that as it has been mentioned, is one of the sector that has the biggest opportunity, or one of the biggest opportunity for reducing greenhouse gas emissions, but at the same time is one that is seen as a bigger risk to invest. But it's not just allocating or driving capital towards this type of projects or for small farmers or across agricultural value chain. In order for this finance to be actually useful and to deliver impact, it needs to combine capacity building. So the way I see the role of international development financial institution is that they should provide climate finance, where a part of these funds are directed for technical assistance programs, and the other part is directed towards grant or concessional loans. I would go back to the AFD, the French development project that we have been working on in Mexico as an example, because the project combined those two things. It provided capacity building to FIRA, which is a national development bank in Mexico, and it also provided the grant so that FIRA could disburse these loans and the incentive on the interest rate. And one one good result of the implementation of this project is that we have seen that private banks in Mexico have started to replicate the type of loans that FIRA provides. So in the way I see it is that the development, the AFD as an international development financial institution sort of helped demonstrate that this could work. So now the private banks are more willing to invest and to provide finance to the rural and agricultural sector in Mexico. And this is something that we have also been doing with the IFC and IDB Invest. And this has been a little bit more broad in terms of the sector coverage, because both IFC and IDB Invest provide also grants and capacity building for private and public banks, so they can prepare to implement sustainable finance programs or sustainable finance products. So just to mention a couple of examples, we have been providing capacity building for financial institutions that can issue thematic bonds, and we have been helping them in order to increase their capacity so that they are able to assess whether a project could be considered as green or as sustainable, and what is not that. And we have also been enhancing their capacities in terms of monitoring, reporting, and verification, which in the end is also key to continue scaling up climate finance. Because, and I heard this in a panel, I think on Wednesday, that we do need to continue discussing about how to scale up climate finance, but not just to talk about the volume of the finance that is being channeled towards achieving the goals that each jurisdiction or each party has set, but that we need to also start talking about the results. How are we going to measure the outcome of this volume of climate finance that we need to deliver we need to have in order to deliver net zero or the climate targets. Thank you, Chris.
Thanks, Amanda. And really, really helpful insights from some of the work that you've been doing in Mexico and other parts of Latin America. I guess, Mohammed, keen to hear from you that same question around the opportunity for collaboration between different types of financial institutions, with a particular view around where do you see the need for maybe Nigerian local banks and to involve them more in the financing of the sectors we talked about, and what type of support do they need to begin to really mainstream this thinking in some of their regular operations?
Thank you very much, Chris. And I think maybe what I'd like to, I'll start from a point that Amanda made. I think we have to be very clear how we separate climate finance from development finance. In a previous career, I used to work with a global development organization. And one of the risks that, one of the events that happened was once there was a transition in sort of the leadership in some of these developed countries who might be the major source of climate finance, you saw a change in attitudes towards how development finance was counted. So, for instance, you see non-technical assistance being counted as development finance. And I think one of the risks that we face, particularly in the current context, is a double counting of development finance as climate finance. So I think this is one of the things that we have to be very, very clear how we make sure that we segregate climate finance from development finance. The second issue that I think is how then do you take that climate finance as Amanda has said, to catalyze local efforts? I think climate finance should serve as a catalyst. It can't replace what domestic finance can do, but it can certainly point the way in terms of how that local finance can be leveraged to, for instance, support some of the work that Boyan and his team are doing in terms of shifting from a diesel-led approach to alternative energy to more renewable forms of alternative energy. And I think one of the things that really should be the focus for this type of climate finance is in terms of reducing the risk. So acting almost as a backstop or as a guarantee towards local finance. And so, for instance, how do we get international climate finance first to act as a seed for these efforts, to build capacity and to improve some of the local technological frameworks, but then also to backstop the efforts of local financial institutions. So it's in essence acting as a guarantee. So if we're able to attract a certain amount from the international financial institutions going into our domestic institutions, financing institutions, then that can unlock further investments. And I think this is maybe the way that I would see that interaction between international climate finance and domestic finance in Nigeria.
And that's really helpful. And I thank you for making that very clear about the different roles and I guess the different functions that institutions need to play in time over as markets develop further. Boyum, so moving on this topic into you're a CFA. You've studied finance before, but one of my question for you is around some of the risks involved and thinking about some of the different stages that markets go through as they develop. Some of the perceptions of risk locally, some of the challenges around currency exchange, and therefore there needs to be some very clever deployment of the public finances available to really crowd in the private sector. So any thoughts from either the work in Nigeria or other emerging markets, how we can address some of these challenges?
Yes, thank you, Chris. So, as mentioned earlier on, the one of the biggest challenges for the genset replacement program is the issue of inflation and depreciation or perceived depreciation. We've seen the same thing elsewhere where we've worked with coal retirement, where we have had transition schemes where the idea was to bring in climate finance or international finance in at supposedly very low rates, so low single digits, maybe 3, 4, 5% interest rates in dollar terms. But if they have to be paid back in local currency, the actual interest rate observed is much higher. And I think that's something that you have to be quite careful about. There are ways of dealing with it. There's a TCX facility, for example, that we'll likely be using in Nigeria and other sub-Saharan African countries, which provides currency hedges against this, and it does so in a pooled manner. So it holds a number of currencies that won't necessarily move together, and then by having a portfolio effect, it then reduces the cost of hedging an individual currency. So there are ways of mitigating that, but fundamentally, an issue is if the inflation persists, then it's very hard to bring in finance that has to be repaid, and therefore the focus then shifts to as we said, the domestic finance, which is insulated against that. Another thing I wanted to just bring in was the difference between climate finance and development finance. That is a very relevant split that we haven't actually discussed enough, I think. I was in Nairobi recently for the GOGLA conference, which is Global Off-Grid Light and Solar Conference, and that looks at energy access, which is not directly a climate point, it's more a justice point, right? It's a different sustainability goal, but has a similar delivery mechanism. It is microgrids, it's distributed generation and the like. But it is important that we don't just focus on that we don't conflate the two. I think it's important that they are additive rather than replacements. And finally, I just want to bring in one way of we've tried to we are considering accentuating or sort of adding to the finance base is that our funds start with grants, but there are not unlimited grants available. This is a philanthropy grant from IKEA Foundation and development aid from FCDO, but we need to channel in or additional funding. Firstly, DFIs, so development finance institutions, potentially also some low-cost commercial, but we have to sort of be careful with that. But also another thing is to potentially bring in carbon credits, the value of carbon credits in this. However, with things like genset replacements, the only access currently, although now that we've come to agreement on 6.4, Article 6.4, supposedly. Let's see how that works. But the only access is voluntary carbon markets, and there the monitoring and validation that Amanda mentioned is extremely important. And what happens is that the gold standard credits tend to be things like carbon removals, whereas avoiding carbon emissions are either valued less or not allowed at all. So it's quite difficult to get those credits in, but that is a hope that we'll be able to use that to accelerate the replacement of diesel gensets and petrol gensets in Nigeria and then across sub-Saharan Africa. Thank you.
Thank you, Boy. I'm really helpful to think about some of those different financial structures, and I'm glad that you brought us onto the topic of carbon markets. As you mentioned earlier this week on the first day of the COP, there was a big step forward on the agreement of the Article 6.4. So there's clearly a role for carbon markets to play in addressing decarbonisation. I guess any comments from my colleagues from Nigeria about the role of carbon markets? Is that something which has come across any of your work? Dr. Kabir.
Yes, definitely. So with carbon market and carbon trading, some key principles have to be in place. First, the MRVs to understand where you emit, and second, the greenhouse gas emission. So I know in Nigeria, I think under the leadership of the DG, there's what we call, is it an energy calculator? Yeah, something that studies the amount of emissions from different institutions, MDAs, and all that. Yes, but the fundamental question is the trading partner. I mean, since the signing of the Paris Agreement, we've been talking carbon trading, carbon market, but really, for the larger part of Africa, there's really little going. I know there's some activities going with regards to carbon trading in South Africa, the JETP. I know there is in Kenya, but currently in Nigeria, we're transitioning to clean energy. You're seeing the vehicles from premium spirit going to CNG. A lot of them are electric. Most of the residential areas are going off grid. Even the industries are all sustainable, circular economy. But with regards to carbon trading, I don't know. Is it maybe perhaps when Amanda was talking about capacity building, perhaps maybe what the country needs, or Africa, is capacity building with regards to access to carbon market and carbon trading, because it's almost absent, right? And I know the country has done a lot with regards to transitioning, even more than it should, perhaps close to meeting its climate targets, but you have zero investment into maybe the transition or the trading, or zero benefits. So I think it will be key from our participants if we have maybe carbon trading institutions. I think that dialogue needs to be had. Yes. Thank you.
Yeah, no, certainly further dialogue, and certainly one of the themes around this event is that local capacities and the skill sets that are required. I'm going to try and just try and explore this term capacity building a bit more, but also challenge it in some sense that capacity building is fundamental to get the skills deployed, but actually we need to go beyond that. We need to try to create mutually beneficial partnerships where organizations both within Nigeria and outside Nigeria both benefit from actually the collaboration, and actually both can see the commercial opportunity and deliver on climate goals by actually collaborating in a way. So the Carbon Trust does a lot of work actually with global companies that are active around the world with supply chains across many emerging markets. And we're always encouraging those large companies to really play a really active role in supporting their suppliers to identify some of the climate risks and opportunities that they face, but also think about how you can begin to provide supply chain financing to begin to say not only identifying what you need to do, but also provide different ways to finance them as well. So I think there's definitely capacity building is a part of it, but I think I'm keen to hear about any examples that the panel can share about where the work that you've been involved with actually has gone beyond simply upskilling, but creating these generally mutually beneficial collaborations. So any colleagues would like to sort of talk about some of those works they've been involved with in the past? Man, do you want to give it a first go? Thank you.
Yes, thank you. Yeah, so I think I can bring two examples, and I'll go to Bolivia, which is a recent project that we just ended. We were working with an indigenous group that is called the Tacana people, and this capacity building did go like it was not just like workshops. We sought to create capacities in the community so that they could manage better their forest, and not only conserve the forest, but rather obtain the type of products that they usually gather or collect from the forest, and at the same time create products that could be sold in other markets, and that is already creating a better welfare to these indigenous communities. So talking about it's not capacity building, the way I see it, it's not just going there and delivering a workshop, but it's like you first need to understand the needs of the whether if it's a company in a value chain, a group of producers, or a group of rural communities. You need to understand their needs in order for this capacity building to actually be successful. And ideally, you would follow up on this capacity building, so that you can ensure that these capacities are kept, and it's not just a training. And then I will go back to the work that we have been doing with the French Development Agency. I know I spoke about the work that we did in Mexico, but we have seen that something that the French Development Agency is doing is that it is creating collaboration with national development banks. And these national development banks also work with financial intermediaries. That could be a municipal savings bank or a bigger commercial bank. And that in the end also fosters partnerships and collaboration which are needed, so that the efforts that are created by these capacity building or technical assistance programs are actually kept and maintained across time.
Very good. That's a really helpful experience and very, very practical examples of how you begin to sort of support different stakeholders with skills, but not just skills for the sake of skills, but to begin to deploy them, to begin to bring about change for the long term. Okay, so we've been going for about 45 minutes now, and we've had a really good opportunity to get quite deep into thinking about some of the real on-the-ground challenges, both within Nigeria and across some of the markets that Amanda's talked about. Part of the joys and the challenges of climate change is that this is a really local issue that we need to address as a global community. And obviously, one of the main ambitions for this COP29 here in Baku is thinking about that global climate finance commitment, the ambition to set a new collective quantified goal. And obviously, we're very hopeful that the ongoing processes here can achieve a new structure where the appropriate levels of climate finance can flow from primarily from the rich countries in the world to support the countries that need finance, both to mitigate climate change, to increase their resilience, and also to think about addressing the loss and damage caused as climate change begins to kick in. So let's try and shift this now from that local level to the global level. I was talking to Mohammed earlier about some of it. He's a regular COP visitor, but not for COP's climate change. He's involved in the UN Convention for Anti-Corruption. And so I think maybe any perspectives on how the different COP processes are run, but also there's been quite a lively discussion outside the COP by thinking about, is the COP process fit for purpose? But recognizing that the multilateral process will always be one of the work streams to achieve the goals. What else can we do as coalitions of the willing to begin to bring about change when there's going to be challenges within different arenas? So over to you, Mohammed.
Thank you very much, Chris. And as you said, yes, I have quite a lot of experience with COPs, but just not the climate change COP. But I think there are quite a lot of similarities in terms of the process. So drawing from sort of the UN Convention Against Corruption, I think one of the issues with the COP, and it's not necessarily a negative issue, is there's almost a perception that the COP is the agreement, right? That everything revolves around the COP, and I think this is a perception that we have to get away from. Yes, it is. It's a great opportunity to sit together in a room, to come together and to make agreements and work towards a collective goal. But I think we have to see these events as the culmination of a process rather than the process itself. And I think one of the things that through the UN Convention Against Corruption and possibly through the climate change COP is how do you ensure that that visibility of the issues is live throughout the entire process? So it's not just when we come to Baku or when we go to Brazil, that then there is this awareness that there are issues around climate change. So this is the first issue. And again, it's very similar to what we do on the anti-corruption side. That's when there's a COP on corruption, anti-corruption, then it becomes a major issue. Once you're done with the COP, everyone goes back to business as usual, which we have to avoid if we're going to make a substantial and significant enough change. I think the other thing, as you mentioned, Chris, is there are multiple pathways towards achieving the goal that we're trying to achieve. So whether it's on climate change or on anti-corruption, I think the COPs are one way of doing this, but there are other mechanisms which continue even outside the COP process. So, for instance, as Dr. Kabiru has mentioned, Nigeria has made significant progress in a number of areas. The compressed natural gas initiative is one. On the anti-corruption side, we have various regional and continental agreements in Africa that are making a real change to address issues of public integrity. And we have to make sure that we see this entirety as an ecosystem, right? So how does the COP process interface with the other processes that are ongoing, so that, you know, we don't get into this process where people assume that because you're not getting the agreements you want out of COP, then there is no hope. No, there is hope because you are having alternative mechanisms to do this. So I think this is, for me, just on my experience with the UNCTAD COP, of some of the things that potentially may be seen as a negative, but I think can also be flipped and seen as a positive. Thank you.
Thank you, Mohammed. I think this is the 8th or 9th climate COP that I've been to. So I've been to many sort of good COPs and bad COPs, and it's always a very mixed emotion, whereby often there's challenges in the negotiations because the entire multilateral process requires this consensual process. But I'm sure that all the people here who have been around the COP, there's endless success stories that we were talking about. So I'm going to mention one in a moment, but before I do, I was going to brief the panel that I'm probably going to come to you all in the next moment and ask you for maybe one key takeaway or one particular ask that you would like to see to begin to really accelerate the ability for emerging economies to access climate finance, to really sort of drive sort of change in the local economy. So have a think while I talk about one particular example. While I was actually in the Nigerian pavilion yesterday, there was an MOU being signed between InfraCredit, which is a financial institution looking to really de-risk some of the investments in the infrastructure required to accelerate Nigeria's development, with a focus on some of the low carbon aspects, with the a institution called British Investment International, BII, so part of the UK government's support for development. There's now got a much stronger climate mandate and is supporting a range of financial institutions and other companies across the both sub-Saharan Africa and South Asia, and increasingly actually Asia more widely, to really begin to think about the development and economic opportunities and how you can really mainstream sort of the climate thinking within those the growth opportunities. And that's one particular collaboration between two financial institutions that are going to begin to de-risk sectors that are going to be fundamental to achieving the growth that we'd like to see. So that's and if you walk around the pavilions here in Baku, there's so many of these collaborations that are ongoing. It's very hopeful to see that these different organizations are working together to drive the change we need to see. So that was a really positive thing that I saw yesterday. Let me start at the far end down here. So Boya, over to you. What's your key takeaway from this discussion or your time in Baku?
Yeah, thank you, Chris. So I suppose my key ask, to start with that, in terms of ZGen in particular, is to ask for support and collaboration, open collaboration from our colleagues in Nigeria. I think schemes like this are incredibly important to move the needle for people. It reduces costs for people and for the Nigerian state in terms of lower fossil fuel use. And it is the openness, the comment there is the openness is very important, transparency, because when we can prove that this is a relatively small program, if we can prove that it works, there is a lot of climate finance available waiting in the wings. It really is just waiting for saying, does it move the needle enough? Is it big enough? And is it reliable? I think having collaboration from like all levels, from Nigerian government to municipal level, having and NGOs and others, having that collaboration and showing that it is actually sort of leaning into the commitments that Nigeria has made in terms of NDCs, that will really strengthen the program and will help it deliver far more. So, thank you.
Thank you, Boya. Mohammed, over to you.
Thank you very much, Chris. And I mean, I'm sure you won't be surprised, considering that I'm a visitor from Anti-Corruption COP, that my focus is probably going to be on the transparency of the climate finance. I think not just transparency in Nigeria about where this finance is going, but I think there's also a need for transparency regarding the source of the climate finance. So we need to know and understand precisely where and how and who is funding these climate finance projects in Nigeria. I think one of the risks that we've seen through some of the work that we do is there are projects that are sort of shrouded within a climate finance model, but if you dig into them and actually look at them a lot, some of them do tend to be vehicles for moving illicit finance across. So, for instance, one of the projects that we've seen in Ghana, I think recently, to do with waste recycling, it looked like a climate finance project. They talked like a climate finance project, but when you looked at the underlying project, essentially what they were doing was moving toxic waste from Europe into Ghana and dumping it there. So I think we do have to have that transparency around some of these projects and some of this financing as well.
No, Mohammed, I couldn't agree more. I think the needs of the entire integrity of the system relies upon that transparency and a greater sort of awareness of where the finance is flowing from and to. And so I think that as we move into the new era of the acronym with a new collective quantified goal, there needs to be a governance system enabled to allow all actors to really have faith in the system and to be able to ensure that projects such as the one you mentioned are not supported more widely, but certainly not with anything that's going to be labelled as climate finance. Amanda, over to you.
Thank you, Chris. So I think I would highlight 2 points. The first one, it's about raising awareness and creating capacities. I think that sometimes the resources are out there. It's just not easy to understand how countries or how industries or farmers can access them. And there's a need to understand what are like the conditions or what are going to be the commitments when you access these funds. So for instance, when we mentioned carbon trading, there was a clear need to create capacities in Nigeria so that the country can start assessing whether they want to engage in this type of cooperative approaches or not. So I think access to information and awareness raising is key. And the second one that I would mention is that there's no like one silver bullet, and that climate finance has to be really tailored and fit for purpose to the local context.
Very good. Thank you, Amanda. And last but not least, Dr. Kabir, over to you.
Thank you very much. So availability of a lot of climate change is a story that we've been hearing for all the COPs that we come. But up to now, there is no commitment. So I think my first question is, how do we make these COP commitments binding on these countries, right? $100 billion is available, but I mean, most of our countries that are most affected by this climate change get less than 1% of it, right? And you, as you know, for climate change effect is more of geographical than concentrated emission per location. So even if the United States or the Asian countries emits a very high amount of methane or emission, not necessarily the effect of that climate change is going to be in that country, right? It's just like a butterfly effect. So you can see it in another country in Africa that emits almost zero emission. So I think the fundamental question is, how do we make these commitments binding, right? That is when you begin to see even commitments from our countries to follow up with this climate change targets. But we've been given targets without binding commitments, without finances to ensure that we meet these commitments. Don't forget that, unfortunately, the technologies to transition is not domesticated in these developed countries. So how do you expect these development countries that are somewhat poor or at low economic level to begin to use scarce resources to adopt these clean energy mechanisms when no finance, no incentive, no benefit is coming to them? So I think that's a categorical question I want us to go home with. Now, the second thing that I want to challenge our audience here is, how do we scale up from capacity building to actual pilot? Which institution here, including yours, can pledge a pilot for us in Nigeria, a pilot carbon trading? Of course, we've transitioned through CNG, through EVs, and a lot of other climate smart agricultural practices. But can we get one institution to do to do a pilot trading for us? So these two, I think they're very, very critical takeaways that we should go. Unless we want this to just be a gathering where all of us come and sit and talk and then leave. I think these two key issues, if we can, amongst ourselves, sort out before we leave here. It's a huge challenge, but really, how do we make this commitment binding? And which institution among us here, I'm sure there are a lot of development institution members seated here, including yourself. Can we pledge a pilot in collaboration with the Climate Change Council of Nigeria? And these pilots are not going to be expensive because we've already transitioned. We have a lot of residential areas that are already off-grid. We have institutions in Nigeria, they're off-grid. We have a huge percentage of our transportation sector that is using clean energy. So which institution can help us trade the carbon offsets from these activities that has happened? Thank you very much.
Very good, Dr. Kabir. A very clear challenge there you put to the audience about identifying real action and moving beyond talk and the idea of simply building capacity. So let me just sum up with a few final takeaways to really focus on some of the key messages that I heard from our panel today. So just as a reminder, we're really trying to dig into the challenges that are facing Nigeria and other emerging economies around accessing climate finance. And I think we went down to a really deep level within a number of the different key sectors within Nigeria, so looking at the agricultural sector, the cocoa industry, talking about the energy sector, and where the finances needed to be in to address some of the risks, to invest in the technologies and the changes in the processes they're going to bring about the multiple benefits that are required. It seemed that the solutions that were being put forward by the panel focused on this idea of collaboration, working between different organizations with different skill sets to begin to put in place genuine partnerships that are going to be developing mutually beneficial goals. These need to be done in a transparent manner to ensure that the integrity of the system holds up. And the solutions need to be really tailored and locally appropriate. That's something which is, I think, I really heard very clearly, that we need to make sure that we're developing technology locally that's going to be part of the solution, and also creating wider benefits for the economy. And all of that sits within this wider discussion around how do we make the COP commitments truly binding. And there was a valid call there about the just and equitable elements of the climate deal. As was mentioned, Africa has contributed such a small part of the emissions globally, but is a continent that's exposed to the climate crisis particularly. So there's a responsibility of developed countries to support development, to ensure that the mitigation efforts are accelerated as fast as possible, so therefore emissions are maintained at a low level, and that we have a opportunity to invest in the resilience of the economy across the continent. And that will only happen when we see real pilots, so real projects on the ground that requires commitments to go beyond talking and capacity building. So that's the panel. So thank you very much for that. Let me now open the floor to a Q&A session from across the floor. We have a gentleman in the back with his hand up straight away. So I'm not sure if there's a microphone in the room. If there isn't, I encourage you to stand up and introduce yourself and set your question.
Yeah.
And therefore, we're having conversations with them in terms of helping to prepare for projects to go from concepts to bankable. And they don't have the capacity, or they don't have the facility for that. I mean, you want to eat the cake, but you don't want to buy the flour or the oven. I don't understand. So that conversation needs to be taken home. Nigerian institutions need to be able to finance project preparation. That's one. Two, I want to also echo Dr. Kabir's comments on two things. One, we're no longer in a place where we want to be writing reports anymore. Most of these external financing wants to write reports. They want to do studies. We have more than enough documents sitting on shelves collecting dust about the same thing that's been done in 2016, in 2018. Now they want to do the same thing all over again. Mama Ngozi at the back street of my village somewhere in Anambra State really needs power. She needs energy. She needs cooling to be able to survive. I mean, how do we help her? We need on-ground projects, interventions that changes lives of these people who are not able to speak for themselves. She's not here. I'm speaking for her, right? So these are the people that we should be targeting with these finance flows. But we need credible projects and financing that's able to show bankability so that we can take them to closure. The last thing I want to talk about is amplifying on agriculture. Thank you, Dr. Kabir, again. A country of 230 million people and counting, we need to be able to feed ourselves first. The food crisis is unimaginable. And there's ample opportunity in climate smart agriculture all across the country, 5 eco-climatic zones with very arable land, and we're doing so poorly. And the over-focus on mitigation, sometimes I think it's, sort of skews that conversation, And we need a lot more finance focused on agriculture and adaptation, because that is key. And like he also mentioned, the amount of emissions in those sectors are significant as well. And therefore, you're killing 5 birds with one stone. You're feeding the people, you're creating opportunities for adaptation, and most importantly, you're also reducing emissions. So we need to be able to do 3 things. 1, finance project preparation. 2, do more on-ground interventions, pilot projects that demonstrate that this works, and so that we can use private capital to scale. And 3, let's focus a lot more on agriculture and adaptation.
Thank you. Thank you very much. Next question, we have a couple over here. So, okay, we're going to do 2 here and then 2 over here. Then we're going to come back to the panel. Okay, thank you.
Hello, my name is Nwamaka. I'm a Nigerian, but a lecturer at the University of Glasgow, Scotland. I thank Dr. Kabiru, if I got your name correctly. So when we talk about pilot study of trying to do a pilot, it's important that we also take note of context. Africa loses, from one report, about 60 billion yearly to projects that don't work along the grains of African tradition. So this project gets abandoned, okay, because it's not contextualized, with the reality of the African, in the context of Africa. So in trying to do pilot study, my take will be, it has to be led by Africans, it has to be led by Nigerians, and it needs to work along the reality of what Nigeria is, not from what the West is. Thank you.
Thank you so much. My name is Usman Mohammed. I'm the CEO of Eco Carbon. From the first day you initiate contact with either GCF, Jeff, or Adaptation Fund, it takes you more than a year before you even start thinking of a readiness fund or something like that. So the requirements, the cumbersome of these requirements, and even if you access these funds, an Nigerian entity can only work with a United Nations entity in implementing this project. Why does it take that so much longer time? Thank you. That's my question.
Okay, thank you very much. My name is Olumide Idowu. I'm from Nigeria. My question is going to be focusing on people that are suffering. They say when 2 elephants are fighting, is the grass that suffers. With all this conversation, you remember very well that we have policies in Nigeria. How do you think we can leverage on some of these policies that can help us to drive this climate finance? Because nobody in the community will understand what you're talking about when you talk about climate finance. So what's going to happen to the people that are actually the grass that are suffering? Because it's very important for us to look at that so that all the conversation we're having here will be able to take effect, and people on the grassroots will be able to understand if we're actually driving financing for adaptation or mitigation. Thank you.
I'm going to pause there 1 second because there's some very good questions raised. I'm going to see if the panel's got any initial feedback on those first 4 questions, and then I'm very keen to come back. We've still got another 20 odd minutes, so questions will come as well. So any thoughts from the panel on particular project development? How do we ensure that pilot studies are led by Nigerians? How do you access those international climate funds? And how do you ensure the policies are really going to support this of the grass level community? So any particular takeaways, first of all? Dr. Kabir, do you want to start?
Okay. Thank you very much for your questions and your comments. So first, what I would say regarding project development and why you see a lot of Nigerians, as a participant mentioned, aren't really interested in project preparation. The truth is, if you ask me, a lot of it is a waste of time. Why is it a waste of time? For such energy projects, we already have pilots in Nigeria. The Northeast Development Commission has done a lot of clean energy transition in the rural area. The same thing Rural Electrification Agency have done. Ministry of Environment have done a lot of clean energy sustainability projects. So instead of trying to prepare, why don't you just go in to scale up that project? I think that's what would make sense for Nigerians, right? Instead of starting something from scratch. We've done a lot of scattered clean energy projects. So I would advise, let's scale up, not start preparing. Now, with regards to policy, I think I would like to challenge the DG Climate Change Council on that. So we have a lot of scale up tax policies that support. I know now there's tax aversion or tax holiday for importation of clean energy machineries. This includes EVs, solar, agricultural machineries, but these policies are scattered. Now, our private sector are not even sure who to go to, right? You go to the Ministry of Finance, they send you to the customs sends you elsewhere, some send you another place, so it's a bit scattered. So that's why I like to challenge the Apex Institution on Climate Policy and Regulation to try to bring these policies and create a one-stop shop. I mean, they're headed by the president. They have access in the ears of the president. Let that waiver be domiciled in the Climate Change Council so you know where to go. When you're importing energy transition related activities, you just go to the Climate Change Council and you get that waiver. However, I've been hearing questions. I think we give a challenge. I'm sure there are either Nigerian institutions or non-Nigerian institutions. I haven't seen any volunteer with regards to that pilot. I think it's really key. Let's have one pilot, or let me call it a scale up, because you can still go to the Climate Change Council. I'm sure they're aware of different segments of renewable energy, clean transition, climate smart agricultural projects that have happened by different institutions and government. Please take one, scale up and trade it. And I think, Chris, perhaps if we don't have a volunteer, you might have to volunteer for us. Yeah. 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 Okay, great. Please, can we hear this? Okay, after my colleagues would like to hear this volunteer, please. Thank you.
Okay. Any particular feedbacks on these questions here? Mohammed, do you want to go? Yeah.
Yeah. I think I'm not going to spend a lot of time on this. I think Dr. Kabir has addressed many of the issues, but I do think it's also important to look at our strategic communications around the issue of climate change. I think this is very, very important and addresses some of the questions that were asked regarding the policies. I think we need to connect what we are doing at COP and what is happening on the ground in Nigeria, right? So, for instance, a lot of the commitments that are being made, a lot of the programs that are being implemented, we talk about them in very exalted language, and it's not easy to access for individuals at the grassroots. And I think it is important that whether it's the Climate Change Council or someone else, that we do focus on this strategic communications piece. The other thing is, maybe I would slightly disagree with Dr. Kabir, is on the project preparation. I think it is very, very important to have sufficient capacity for project preparation. Yes, it could be built on top of what has already been done in terms of some of the pilots, but making sure that you have processes to document what has been done and to build a pipeline of bankable projects is very, very important. It may not necessarily need to be everywhere, but maybe again, it's about building that capacity in one central location. We already have a lot of expertise in this across different Nigerian government entities. For instance, the BPP, the Bureau for Public Enterprises, the Infrastructure Concession Regulatory Commission, both of them have extremely strong expertise in project preparation. And it's simply about tapping into those and bringing it into this model of climate finance. So this would be the only two things I'd add.
Very good. Let's go back to the floor. Okay, let's start with some gentlemen over here. So yes, what is the gonna? Oh, you go for yes. Yeah.
So many. Yes. Hello, my name is Kolak Bade. I am a 16-year-old high schooler based in Chicago. I was wondering, you guys were talking a lot about market approaches, and I was wondering if you guys were paying attention to any non-market approaches, like more holistic and more nature-based ways to reduce emissions.
Very good. Thank you very much. I'm going to pass the microphone to the gentleman in front of you there. Very good. Thank you.
Good afternoon, everyone. My name is Dr. Mutala Mohamed Bagana. I'm the special advisor to the governor of Niger State on special duties. So Niger is volunteering. So Niger State sits on 76,000 square kilometers of arable land, almost 10% of Nigeria's total land mass in terms of the square size of Nigeria. When you look at that, we are almost like twice the size of Netherlands. We have 4 hydropower electricity, 2 very important major river Niger and River Kaduna. So we are willing to volunteer. But my question is very, very important. And Kabiru, I liked some of the points you raised. So we sit down here and we talk about institutional arrangement. So in Niger State, we have tried to do that since we attended COP last year. We are told, oh, you are not ready as a subnational. So, okay, no problem. Let's go back. Let's fix our state. What did we do? We set up an green economy initiative. We pass it into law. We set up an agency specifically for green initiative, Niger State Agency for Green Initiative. We have done that. We have also unveiled a blueprint on green economy. So what we have come to realize is, so sometimes when a subnational is told to get ready, there will be a bottleneck at federal level. Oh, you know what? Okay, you have fixed this. Go back to the national, interact with NCCC. So my question is, at what point will we talk about climate finance, greening the economy, and global players begin to interact directly with state? Because at the end of the day, when state get ready, national will be impediment. When national get ready, oh, state is not ready. At Niger, in Niger, we are ready. You guys can actually use us to pilot whatever we are doing. Why are we ready? Right now, we are cultivating 250,000 hectares of land for agriculture. We are big in agriculture and we have demonstrated that. We have more agricultural tractor than the entire Republic of Nigeria. Why are we not ready? We are ready. Thank you very much.
Well, very good. Gentleman in front of you. Thank you. Yes. Yeah.
Good day, everybody. My name is Joseph. I'm from Federal Ministry of Innovation, Science and Technology. I was speaking on the pilot model carbon trading. I want to be sure you're looking for volunteer to start up something on that level, and with the right network of organizations and government agency and private sectors here. I know that we are able to take up this challenge, considering all the expertise we have. For now, we have a lot of work we've done in some area, but harmonizing our work together with other agencies here. Like he said, from Niger State, I was born in Niger State. I grew up there. I understand everything he's saying. And not long ago, we got some requests for partnership in some key area sectors, which I highlighted out. So we're going to work more. And we came to Niger State not long ago. God bless you. So on this area, I'm pledging that we are able to take up that challenge of pilot model carbon trading. So we synergize with relevant agencies and other partners and get something done. Thank you.
Very good. Lady
Hello,
White.
can I speak, sir?
Oh, sorry. Yes. Okay. one more here, then these two here, then we're going to come back to the panel. Okay. Yep.
All right. My name is Professor Ujugo Peter, Director of Research and Training of the Nigerian Meteorological Agency. The Nigerian Meteorological Agency has two important directorates that can assist seriously in terms of what we are discussing. Directorate of Applied Meteorology, whose director is here, and Director of Research and Training. We have looked into those areas because we have units in climate change unit, we have unit in agrometeorology and agroforestry, we have units in hydrometeorology, and we have been working in this area. And you know quite well that before you can really talk much about climate financing, carbon trading, you must have data, documentation of what we are doing, what has been done in terms of mitigation that you want to trade. I feel that Nigeria is far under popularizing, or in terms of data, doing more than what they are recording. The data are not there. We work with the rural area, like the agrometeorology, we do extension work in rural areas, in everywhere, working with the rural farmers in terms of how they can apply the meteorological data into their daily use. Every year, we normally come up with climate, seasonal climate prediction. And every month, we come up with bulletin that scale down. We scale down this information to various states, but we discover that there is a lack of information, which if opportunity is given to NIMET, Nigerian Meteorological Agency, the DG who we are representing here will be able to go into such area, provide those information that will assist in climate financing and carbon trading in Nigeria. Thank you.
Very good, thank you. So, gentleman here, and then the lady after him.
Thank you very much. My name is Umar Salianka, Director of Environment and Climate Change at Kano Climate Change Management Agency. So, before Nigeria, I wanted to make the declaration because we made sure that before we arrive at COP, we validate our Kano climate change policy, which the DG has supported very well, to making sure that Kano State have a climate change policy. And for the energy and other policies, we are on a crossroad trying to make sure that we got that. I have a question for Dr. Kabir before the declaration. That's what I wanted to do. You made mention of incentivizing the issue of green financing and sustainable development project. What I want to know is whether you can take a look to learn from Amanda, from the success stories on the French Development Bank. There are success stories, whether she will volunteer to give us the framework they use, and whether or not you have developed the risking framework, the role of non-state actors in the risking of this sector, because it's one thing to invite and incentivize for them to invest. It's another thing to have a recouping strategy and de-risking strategy. So the role of non-state actors in this de-risking process. And are you planning to work with subnational, or it's just going to be from the top level? Thank you very much.
Thank you. And then the lady just behind. Oh, sorry, this.
Yes. Oh, yes, thank you for the presentation. My name is Femi Dosumu. I'm the chairman of Noblesse Green. We are private sector investors in the climate change. On climate change projects, we are currently involved with a project in Osun State, and we are actively engaged in a prospective project in Cross River State. And just like Dr. Mohammed mentioned a moment ago, I think the issue of communication, it's what we must begin to look at, especially in our country, Nigeria. As they will say, for every project, communication is what ties the project together. If we have the other competence, in terms of competence, the doctor from Glasgow mentioned a moment ago on the various scholarly works that have been done in our country, Nigeria. For example, the mangrove forest in the Calabar estuary, which we had the privilege of visiting with our French partners in April, has the capacity to sequester 6 times the value of carbon than the other terrestrial trees. I mean, a hectare will sequester about 1,000 tons. Nigeria is home to, we have the video. Please check this on LinkedIn or on our website. We visited it and the people will not believe. So today, our friend from Niger State, we had fruitful discussions with Salami, who represented the governor, Sami Adigu, right? Yes. So, a lot is going on. We should not reinvent the wheels. We can express our frustration, but the NCCC is doing a great job in the country. We must commend them. Nigeria is ahead many other countries in terms of having the right policies, laws, and regulations. At various international fora, this is acknowledged. We have the ambition to reduce emission by 40% at the end of this decade. And of course, the world recognizes the fact that the mangroves that we have in Nigeria, if we continue to destroy them, then the world will be in the problem in terms of the fact that sequestration of about 2.4 billion tons of carbon will be lost at the end of the century. These are science-based. We have people from Glasgow here. Climate change is science-based. And Dr. Kabir, Mr. Mohammed mentioned the issue of misrepresentation of values. That's what we call greenwashing. It's prevalent globally, but Nigeria is ahead. So please, it's time for action. We've got enough of sitting and touring chairs. So please support Africa in terms of climate justice. Is becoming at the top of the hierarchy. The South has to be supported. Environment has no international boundaries. So let us collaborate. Thank you.
Thank you very much. Lady here, yes.
Hi, good afternoon. Wow, I finally got the mic. We have 30 minutes to finish. My name is Debran Minichi from Nigeria. I initially had 2 comments and 1 question, but the first comment was about project financing, and everyone has done justice to that. The second comment was going to be on what the DG of NIMET said, which was initially true about communication and data. But following up on what he said, with the advent of the NCCC, we have a repository now where everybody will come and put in their data. So I think if we give them more time, right now they're doing a good job. With more time, they will do even better. So the question actually was directed towards Amanda. We've talked a lot about the value chain and localizing of it. And you also mentioned about the project in Mexico with the farmers. My question was about inclusive financing, because drawing from recommendation by the UNEP-FI's PRB, inclusive finance is the thread that links climate finance, social finance, and the total sustainable finance thread. My question was this. I'm done commenting. How do you take cognizance of inclusive finance with the project in Mexico? Because I do know that the Mexican women are more Mexican female farmers than the male, and they have the same problem as us with agriculture, insecurity, and whatnot. So how was this taken care of? How was inclusive finance talked about what was the strategy. If there are lessons learned, we could learn from that. It would be very good to hear from you. Thank you.
Thank you very much. I'm conscious of 2 minutes left, and there's another session coming in straight away. So the panelists will be available for bilateral discussions afterwards. I am afraid we're going to have 2 questions at the end. Okay. So the gentleman with the microphone there, and then we've got one more there, and then the last 2. Thank you.
Good afternoon, everyone. My name is Babazana Abdul Karim from the northeastern part of Nigeria, and specifically Borno State, where very recently the metropolis got submerged by flood. And I just want to make a few comments. Firstly, that Borno from the northeastern part of Nigeria is willing to volunteer, and I'm very happy that the Northeast Development Commission is here, and if given the opportunity, they could also make their points regarding the need to collaborate and help the region in that regard. From the comments that you have seen here, you realize that everything that we've needed to move this forward is here. But unfortunately, we need to have an integrated approach where we need to put all this data and informations, the communications and everything together to be able to succeed. Quite frankly, the truth is, for a lot of us here, we only meet annually at the COP. There is a need for the national office to come up with some work plan, a very simple template where the states can pull in all their data, continue to meet even if it's on a quarterly basis. The NEDC is putting up over 100,000 solar street lights in Borno State. The governor there has distributed over 300 electric vehicles. Under the project that I am supervising,
I'm sorry, we're really at the very end now, so thank you.
We have
question, please.
over 200 solar-powered boreholes. All the motorized in the states are being converted. I'm talking to the national office. A lot has been done. Please pull in the states so that we will have this window for you to have the relevant data.
Thank you very much. It's great to hear it's a strong support, need for action and support for all the states here. Very last question or comment from Abu from the UK government.
Hi, hi everyone. Aspiring to see so many questions and engagement. I have one comment and one question. Comment is that it's clear that the government need to work with the communities, and international communities will have to work with local residents to discuss how do we support Nigeria that sort of works for everyone. The question for me is how does international community like the UK government can support the acceleration of project preparation, piloting, and implementation of projects to accelerate energy transition in Nigeria?
Very good. Thank you very much. So if any requests, that Abu is here from the UK government, so please go and talk to him about exploring collaboration. Thank you very much to all our panel who've provided insight from their experience from both in Nigeria and around the world. Thank you very much to all of the people who contributed from the floor. Apologies we didn't get to you all. Hopefully we can continue this discussion after the event is finished. So my last final thank you is our colleagues in Nigeria's National Council on Climate Change. We really enjoyed our collaboration and look forward to working together with you all and the wider community in Nigeria to support the decarbonisation and improving the resilience of the economy. So thank you very much again, and enjoy the rest of your COP29. Thank you.